Hello, everyone, and welcome to At Barrons. I'm Andy Serwer, and welcome to our guest, Robin Vince, CEO of BNY. Robin, great to see you.
It's great to be with you as well, Andy.
So BNY is the new name for Bank of New York Mellon, big institution, $50 trillion or so of assets, but maybe a little bit less familiar than some of the household names in banking. What exactly does BNY focus on?
Well, we have a series of different customer platforms which are designed to help our clients manage money, move money, safekeep money. We view ourselves as making money work for the world.
Okay, so the institution is 240 years old, right? You're the oldest bank in the United States, first company to trade on the NYSE, founded by Alexander Hamilton. I love all these old factoids about the institution.
Yep, oldest member of the S&P 500, Fortune 500, the list goes on.
Right. So tell us about the legacy, Robin. What does that mean in terms of the institution? I mean, is there any meaning at all to having those roots?
Well, the history is actually very important. We've operated across 4 different centuries. When you do that, you learn a few different things. You learn how to be a resilient organization. You learn how to be really customer-centric. You don't get to be 240 years old if you don't do those things. But maybe most importantly, innovation is what keeps a company fresh and looking forward. And so our clients value our history a lot. They value the stability they get from us. They value the continuity that they enjoy from us. Our people are proud of our history because that history is something that binds us together and maybe gives us a little extra purpose compared to some institutions. But the thing that keeps us pointing forward is that innovation. You asked earlier on about businesses that we're in. And yes, we're a broad, diversified, global financial services company. We have all sorts of different platforms. We're the world's largest custodian. You mentioned that. We're the world's largest securities lender, world's largest issuer services firm. But what we're really doing is solving problems for our clients, and we're also creating new solutions. We launched Wove last year, which is a new wealth technology services platform to help registered investment advisors and broker-dealers create great wealth solutions for their clients, a very important and growing part of the market. So there's a fun bit to the history, there's an important social bit and cultural bit to the history, and then there's also a reminder that innovation is everything.
Just maybe one more follow-up question on the fun bit, which is Alexander Hamilton. And, people maybe weren't so familiar with him, except, of course, the musical just sort of blew him up. And so what's the connection to Alexander Hamilton exactly?
Well, Alexander Hamilton founded the institution in 1784 and went on after founding the institution to actually be the first Treasury Secretary of the United States. Now, we have another piece of interesting founding family history as well in our institution because the Mellon side, which came together 17 years ago to form the overall Bank of New York Mellon, today BNY, but Mellon was an equally accomplished family in the United States. They were essentially the first venture capitalists, almost private equity firm founders. They founded Alcoa. They were very involved in a whole bunch of different industries at the time. And Andrew Mellon went on to be one of the longest serving Treasury Secretaries of the United States as well. We have the account of President Washington and Alexander Hamilton in our original ledgers, which we still have on display in our offices. We have U.S. warrant number 1, the first ever piece of debt of the United States. So we have the artifacts still associated with that period of history, which have their own lessons to remind us of in this day and age.
Yeah, that stuff is very, very cool. The Mellon family, of course, from Pittsburgh, as you're suggesting there. I want to drill down a little bit more, Robin, and ask you about the businesses, because it seems to me, and maybe is it fair to say I should ask you, is it sort of a lot of back office functions rather than, say, brick and mortar consumer lending and consumer banking. Is that correct?
It's certainly not back office. It really is software and solutions provided to clients that clients build their businesses on. You're right, though, that we're not on the corner of every main street in the United States. We're also not an investment bank. And so those are sometimes the businesses which are a little bit higher profile, but we are part of so many Americans and, in fact, people all around the world's lives. The assets that we custody, the solutions that we create in our asset management firms, the payments that we make, the wealth management software that we provide actually underpins a good portion of Americans' lives. We have $50 trillion worth of assets under custody. That scales to about the same amount of all of the invested assets in the stock market in the United States.
What are the biggest opportunities for BNY? Where are you deploying capital? I mean, and do you think about the TAM, the total addressable market for the institution?
Well, we're an organization that really is trying to drive forward, and we've been growing. We had a good performance last year. This year, in our first quarter, we were excited with our direction of travel. And so for us, the total addressable market for us is really solving our clients' problems and helping them with the needs that they have to grow in financial services all around the world. And so we have a variety of different examples, but I'll give you a couple of them. So last year we launched Wove, which is this wealth management piece of software that I mentioned a moment ago. That's an interesting example of really helping to make it easier for advisors to be able to provide solutions to their clients in the wealth market. We were the first bank in the United States to make real-time payments here in the US. The US hasn't been a leader in real-time payments compared to some other parts of the world, but that's actually a place where we've been innovating and we brought that to market. We were one of the first banks to go live with FedNow last year as well in that same space. We're really driving a lot of solutions in AI as an example of another piece of applied important technology, actually making it relevant to clients. And so there are all sorts of different things where we're leaning in to helping our customers with new solutions, new insights to help them be able to provide their services on to their respective clients.
Now, Robin, the stock has been beating the peer group over the past, say, decade, but lagging the market until recently. I mean, you became CEO in September of 2022, and I'm happy to tell the audience that since then the stock has done better. In fact, over the past year, the stock has outperformed the peer group and the market. Why has that been the case? What's led to the outperformance?
Well, one of the things that we enjoy as a company is a remarkable trust from our clients, and that coupled with the fact that our people are very oriented to try to help them and solve issues for clients, that coupled with the breadth of the different solutions and platforms that we actually have. We're a global, diversified financial services company that derives 40% of its revenue from outside of the United States. So we're big enough to do anything that our clients want us to do, but yet we still have that esprit de corps that comes from being a significant but not giant organization. And what we've been able to do, and that's really we as a team of people in the company, is we've been able to see that potential, organize ourselves a little differently, bring a new spring into our step, and be able to go after that opportunity. And clients have been responding to that, and so have investors.
What do you mean reorganizing things a little bit? Because I'm really trying to get at maybe a quantitative reason for the outperformance in the market.
Well, last year, we've set out 3 pieces of financial guidance in 2023 at the beginning of the year. We gave outlook guidance, and we said that we were going to do 3 things from a financial point of view. And on each one of those 3 things, we actually delivered or over-delivered on our expectation. We said we would drive 20% increase in net interest income. We drove 23%. We said that we would drive a return of capital, which we exceeded, and we also said that we would halve our expense growth rate, and we beat that. So in all cases, we did what we said we were going to do. In addition, we brought new solutions to market. In addition, we re-explained ourselves to some of our clients and showed them the breadth of the different things that we actually have to offer. But maybe most importantly, we recognized, and you talked about it earlier on with our history, is that our people are excited about the potential in our company, and bringing culture and really making sure that our people can look forward and feel that there's an enthusiasm and excitement to everything that we're doing and they can play a part of that. That's been an important part of our story as well. So clients have noticed, investors have noticed, and our employees are excited about it. That's a pretty good combination to make progress as a company.
What are the biggest trends in your business right now, and how are you taking advantage of those?
Well, there are a variety of different megatrends going on in the world. You could also say that risks are their own trend, so we should probably touch on that as well. But the growth of the US wealth market has been an important trend over several years. That's a market that we participate in very significantly. We have $3 trillion worth of wealth assets across our own wealth management business and our wealth software and services business, which is BNY Pershing. And so $3 trillion worth of wealth assets is a very significant play in the wealth market. We've seen how our solutions and the combination of the different things that BNY can provide. We can provide payment solutions and banking as a service. We can provide Wove and advisor solutions. We can provide trade execution and custody. We can provide products. We have 1 million different CUSIPs available on our platform. So those things are participating in that important trend. We also see the trend to customers wanting to do what they're best at. And so we have a lot of investor clients, asset manager clients, we have bank clients, and with a common story for them is that they're trying to really hone in on what is the thing they want to spend their time on. Everybody has scarce dollars. Everybody has finite resources. And so we've become the platform that provides at scale, leveraging our scale, they're kind of renting it, to be able to help them focus on what they want to do by leveraging the things that we do. Payments is another example. So there are many different parts of that, but that's a trend to your question in the marketplace.
Where do you think we are in the business cycle right now?
That's a fool's errand to try to predict, if I'm completely honest with you, because we've seen so many false predictions in terms of, are we at the beginning, at the end? Was COVID a real reset, or was it a temporary time out of the cycle that we were already in? But maybe I'll answer the question this way. I'm very optimistic, medium, long term, about where we are in the US economy. If you look at the US economy versus Europe as an example, we've significantly, in terms of the growth of GDP, we've significantly outperformed Europe here in the United States. And there are a bunch of reasons for that. We have a meaningful energy independence compared to many other countries. We have natural resources. We have availability of talent. We have the entrepreneurial spirit in the United States. We have technology. Now we have some additional industrial policy and some other things that layer on that. We have the availability of capital. Put those ingredients together, and they actually create this terrific opportunity for the United States. Now layer in AI, which is something that's really been a focus in the past couple of years, that's likely to be able to generate meaningful productivity growth over time. I think those things make it a little bit hard to spot where we are in a cycle right now. And we'll have to see how that evolves. We can talk about rates and what's going to go on with the Fed as well.
I do want to talk about rates, and I have to agree with you when it comes to the ambiguity of understanding the cycle, number one, and two, the U.S. share of GDP versus the rest of the world has increased, to your point, Robin. So where does that leave Jay Powell and the Fed? Because it is vexing in terms of understanding and then, of course, calibrating policy.
Well, vexing, true in terms of the fact they have a decision to make every 6 weeks to 2 months. But actually, what a terrific problem in some respects for them to have, which is that the underlying strength of the US economy has outperformed so many people's predictions. If we were having this conversation in 2022 or 2023, we might look at that and have had a very different point of view about how the cycle was going to evolve. There's no question that the cumulative rise in prices from having had higher inflation over the course of the past couple of years, 2 to 4 years really, has been very painful for many folks in the world, and particularly in the United States. And so it's coming together and sort of figuring out where that moment is to be able to lean in with reducing rates. That's the question. Now, I think everybody talks about the fact that there's going to be a rate cut. The market thinks that there'll be 1 or 2 at this point. The Fed dots themselves suggest maybe more like 1. But you can't take completely off the table the possibility that there wouldn't in fact be a rate cut this year. And in fact, I think it's a bit reckless to completely disregard the possibility of a hike, although I don't think that's the more likely outcome.
I mean, and isn't it a good thing potentially not to have any rate cut or hike for that matter because it suggests an equilibrium?
Well, it depends exactly how it's coming about. There are different, you can have inflation that's coming about for good reasons and maybe inflation for slightly less good reasons. So I think it does depend, as with many things in the rate cut conversation. But overall, what we should be celebrating is the fact that the US economy over the past couple of years has gone beyond most people's expectations.
I want to talk about stock valuations for banks and for BNY specifically. I mean, with the success you've had, you still have a multiple of 14 versus the S&P, which is 24. People look for risks, again, not just with BNY, but for the entire sector. Oh, there's interest rate risk, there's credit risk. They keep looking for risk. That's what leads to that discount. Is the discount fair? Do you see the discount going away, that banks get to a market multiple at some point?
Well, I'll leave the stock price to our investors. My job is to, with our people, do the very best job that we can do to manage the company, to be able to provide the service that we are providing to our clients. And we're very pleased with the progress that we've been making in our journey. And our investors have been responding to it. And you've pointed out a couple of times that the stock has performed well, and we're very pleased with that. But ultimately, that stock price journey is going to depend on the work and the service that we provide and how the investors respond to it.
Oh, well, let me ask you then, follow up then, just in terms of the discount versus for the entire industry, maybe not BNY, but it's something that you look at, I'm sure, and historically it sort of waxes and wanes a bit. What do you think about the discount?
One of the things that investors really appreciate is predictability, stability, and uncertainty is, as you pointed out, not something that's helpful to investors. And I think one of the things that the financial services industry's benefited from the financial crisis, particularly the 8 G-SIBs. We are one of the 8 globally systemically important banks in the United States. And one of the benefits that has accrued from the financial crisis has been the laser focus on resiliency of those institutions. And so more capital in the system, more liquidity in the system, more trades being cleared, and reducing systemic risk. And this certainly takes time for investors to truly be able to appreciate. And you have to sometimes ride through different cycles to be able to see the benefits of all of that resiliency. Now, we saw some tests of this in the spring of last year. The performance of the 8 largest institutions was very strong through that regional bank crisis that occurred in the spring of last year. And the reason for that is because of all of those post-financial crisis regulatory reforms. So I think there's something about needing to never be complacent and always recognize that we have to be looking around the corner for where else things can, in the financial system, can potentially go wrong. But there is a little bit of a recognition that we've made a lot of progress, and the regulators and policymakers have made a lot of progress. And I think over time, I'd like to think that that does bleed back into reducing any discount associated with the industry.
Yeah, I find that a fascinating line of inquiry. That's something that the regulators, of course, look at as well. And finally, Robin, I want to ask you a little bit about you. You worked at Goldman Sachs for many years, grew up in England. Was being the CEO of an American bank something that you aspired to?
Well, when I was a kid, there were a few different things I think that I wanted to do at various stages. I didn't grow up saying, "Gosh, I'm going to be the CEO of the America's oldest bank." But as one evolves one's career and one has the opportunity to do different things, I'm very lucky. I had the opportunity at my prior firm to do many different things. I grew up on the trading side of the business. I performed a variety of different other roles over my career. I lived through a whole set of important moments in financial services history of the past 30 years, including the financial services crisis. And so having those experiences, those crucible moments where you learn, where you're surrounded by people, you have the opportunity to be exposed to different things, to see problems being solved, it really can prepare you for a role like this. And I feel very privileged to be in this position. We started off talking about Alexander Hamilton. You know, my goodness, he was technically a Brit, I guess, when he founded the Bank of New York. You know, it's 1784. The Constitution hadn't been signed yet, so it is a real special thing to be in a privileged position like this.
A little bit of a full circle for the bank, then, perhaps.
I'm not the only one in between, but
right.
But yes, there's something a little poetic about it.
Fair enough. Robin Vince, CEO of BNY, thank you so much for joining us.
It's so good to be with you, Andy. Thank you.